Prithvi Haldea of Prime Database has joined in to talk about the divestment calendar, which has sputtered a little bit over the last few weeks. Prithvi, good morning. Thanks for joining in. Do you think the government is losing its way with what seemed like a promising divestment program when it flagged off? First with NALCO, half of it went to LIC. Now with sale becoming such a big question mark, do you think it could have been done differently and better?
Yeah, surely, and I think we've already heard that sale may probably not happen this financial year, and they're looking at a date in the next financial year. And when it happens in the next financial year, then it does not necessarily mean April. It could mean even next March, because we have seen even this year, almost all divestments taking place in the last 3 months. But yes, we have talked about this in the past, and I personally am not at all happy with the way divestment is being handled. And there are many issues that I have. One is that for illiquid stocks, are we really discovering the right price? Are we really offering the stocks at the right price? We've seen huge fluctuations in the prices, and I have been advocating that we should have a closed auction. SEBI guidelines do allow for closed auctions where you don't disclose the offer price, and let the institutional investors who are supposed to be wise investors take a call on what price, how many shares do they want to get. And I think you may probably get much better realization in case you had a closed auction. For liquid stocks, we have seen how much of hammering has been done, and the best example, of course, is PFC, which fell down from 400 rupees once the FPO was announced to almost 250 rupees when the issue happened. So nobody is bothered about the huge losses the government makes when the prices are hammered between the date of announcement and the date of the issue. But we always crib about the demand for government to make a divestment to retail investors at a discount to the market price. So I think both in terms of closed auction not being used as the option, and secondly using only the OFS method entirely for institutional investors without any allocation for retail, I think the plot is being lost. Divestment cannot have just one single objective of meeting the fiscal deficit. Divestment has to be viewed in the Indian context from the point of view of enlarging the capital market, deepening the market, getting more retail money into the market. And I think we have lost out on those fronts.
Prithvi, good morning. Is it also a problem of choice? I mean, on RCF, there was none of that institutional investor action we're talking about, or interest even. On sale, again, that seems to be the problem. The ministry is working with one price, merchant bankers are suggesting another. Are they making the wrong choices through what is essentially a difficult market period as well? I mean, they should be a bit more canny in what they choose to offer to the market?
Yeah, I think, of course, selection of the right company at the right time is always critical. But we are here talking of, some of the best PSU stocks. We are not talking of loss-making PSUs or PSUs which are in minority positions in the marketplace. We are talking of dominant PSUs coming to the market. And therefore, there is a certain value that the market perceives of this. We cannot be guided by the current fluctuations in the market price. I think we should convert these opportunities from trading to investment opportunities. What we are looking at today is more of arbitrage between the offer price and the market price. I think people have to be, this whole strategy has to be to encourage long-term investors who are looking at, acquiring large number of shares of a particular company on a long-term basis, and they will be willing to pay a price which they think is right on a long-term basis. But if your entire orientation is around the market price and how you can make quick money purely through arbitrage, there is no investment really happening. You're talking of a difference between the market price and the offer price. And I think the government does come under pressure all the time to look at a price which is close to the market price, discount to the market price. In some cases premium to the market price, but we know that in those cases the premium is really more in the air, because there is no true value even of that price, which is the market price. So I think we should trust the markets in terms of valuation rather than our taking a call based of valuation based on market prices.
No, that's not the point I was making, Prithvi. My point is for something like sale, I mean, the business prospects have been poor for many quarters now. On RCF, there's no clarity on fertilizer policy, but the issue came through. So is the government making judicious choices on that premise?
Sorry. Yeah. You see, each of the sectors, first of all, we have to appreciate 2 points, that in each of the sectors that PSU operates in, there are governmental interventions, and therefore that would always be a concern whether the policy of the government is in place for a divestment to take place. Number two, the market knows that PSUs do have operational interference from the government. And therefore, I think these two factors are always discounted in the market price, and people do take a judgment on, what is the likely impact of governmental intervention, both in terms of policy as well as operations. Therefore, I personally do not think that it is so critical whether, unless one of the companies is doing so badly in that sector and the sector itself on the whole is doing very badly, then you obviously do not push that kind of a company to the market. But for other companies, I don't see that there is a risk in terms of pushing them to the market, because SAIL is a dominant steel player in the market. SAIL performances have been fluctuating from time to time, but we all know that SAIL is going to be there for good times. And there would be people who should be interested in acquiring SAIL on a long-term basis rather than as a trading opportunity. And one of the examples that I keep quoting about valuing a company, is when PE investors buy into a company on a 3-year, 5-year horizon. They are not looking at or too perturbed about the current scenario. So I think, yes, in case a company has been in terribly bad news and the sector is doing extremely badly, then obviously you should not be pushing those kinds of companies, because there would be a lot of negative sentiments around that company and that sector. But otherwise, I am not too concerned about the companies going to the market, because we are talking of all profit-making PSUs, dominant PSUs going to the market.
What about minority shareholders of these companies who are already holding the stock? Because so much of the discussion is about who will pick up the paper which is being offered now. What about existing investors, Prithvi? Because Coal India did an IPO at 245 rupees. And because of all the uncertainty and the announcement of the OFS or intention, the stock is down to 295, which means people who bought 30 months back have actually made a compounded return of just 8-9% annually. Should existing investors of Coal India not be taking the government to court for the kind of price damage or wealth erosion they have caused to their investments?
Yeah, I think price erosion also happens because that's my understanding, and I've seen that through charts that I've made of the 6 OFS, that the price starts actually falling down, not because the company is doing badly or because the sector is in trouble or because there's a political turmoil, but the moment the government announces a particular company's OFS, we see a decline in the price. There is definitely a market operation taking place, and the obvious intention is to force the government then to offer a price which is close to the market price. Therefore, my suggestion has been that we should probably take the market by surprise. There is no need to make 2 months announcements 2 months ahead of the date of issue or 1 month ahead. You require a 2 days notice, and to put the company under question in a suspension mode, like a corporate action, where you do not therefore are forced to match the price or be compounded by the market price and take calls of that kind. So I think the markets, these are all well-researched stocks. These are traded stocks. There is no additional information that is being given to the marketplace. There is no new study that is required to be done. The entire issue is about pricing, and I think one of the things that we should do is to take the market by surprise, not make this announcement much in advance, because we've seen that prices have been hammered, and probably there's a need to also investigate as to who are the people behind price hammering. You remember, Udayan, there was the famous case of ONGC many years ago, where the government actually called all the merchant bankers and asked them who is pulling down the price. And there was some action taken at that point of time. So there is clear evidence that the market will try to force the government to offer a price as low as possible by bringing the market price down to as much possible as they can.
Thanks, Prithvi. Good to hear your thoughts as always. Thank you for taking time out today.